Welcome to the Forex, and here we're looking at the US dollar. And look, we're expecting it to go to, roughly 80-20, the 50-60% sort of retracement level. We can see that it's struggling at the 80, and it could fail from here. So we just need to be a little bit diligent here and not get fixed on a higher price. So we can clearly see this is the A wave and the B wave here. And then for the C wave here, it's a little bit unclear. I can count 5 waves up through to this point here, and that may even extend to this point here. But while this low here is in place at 79.85, then this market can continue to the upside. Once this has been breached here, that would be the first evidence of a of the C wave of B being completed here. And this would also be a trigger for the euro to the upside as well, because we're looking for a buying opportunity on the euro. The euro is not that clear either. So it's all a little bit sort of wishy-washy. So this that low there, 79.85, is critical for buying the euro, the break of that. And also confirming that and also adding to positions would be using group 2 here. So the 79.72 as a retested resistance, or you could even use the 80 there as well, but the 72 would carry more weight at that stage. So you could use these to build in the trade. But as I mentioned, while that is in play there, then there's a couple of options for this particular count here, but they all pretty much pivot on this low here staying in place. So that's the key there. And when looking at the euro, we were looking at wave 1 up to here from down here, and then we're looking for an A and a B and a C wave. Now, the C wave is normally the same length as the A wave, and it's normally in a nice clean 5 waves, which the A wave is, but the C wave is all a bit sort of jolty and bouncy and all the rest of it. And it's good that it's dropped below the 138, as I mentioned before, but we're expecting it to move down to the 137.50 sort of area. We know that the 137.72 is this number here is a very strong resistance area here. We also know that in using the levels as well, just in the sort of general picture, is that when we're working with a particular level and 138 in this particular case here, then we would use group 1 and group 2 here for the range of the swing corrective phase pattern, so forth. And if the 138.30 became the retested support, then that would be the confirmation to trade long at that stage. Of course, you can always get in earlier, and if you were going to get in early, you would need to have your stop under the 137.72, the orange line here, and that's pretty much sort of it. Now, this particular pattern that we've had over the last few sessions, this particular pattern through here, it counts better as an ABC, which would be the A wave, the B wave, and then 1, 2, 3, 4, 5 for the C wave here. So this appears to be corrective, but this is also corrective as well for bullish corrective pattern. So I'm wondering if this is an A and a B and a C wave here, and then folding down through to down here further. So look, it's really quite critical that we use the 138 as the retested support for any long trades, but you can also use the excuse me about that, the 79.85 on the US dollar as well. Okay, let's have a look at the Australian dollar. Okay, the Australian dollar, we were looking for 5 waves down in terms of, just come back over here a little bit, from the high here, down for 1, back for 2, 3, 4, and 5. There's a bit of a problem with that in terms that this wave 4 here overlaps wave 1 here. The other problem with this is that this particular move down through here is in 3 waves here. So this whole thing can be a double zigzag here. And what that would mean that it's possible that that this is the low of the correction here, and we won't get the, well, we've got this here so far anyway, but the B wave that we're looking for, and then another 5 waves down through to here. as such. So what could actually happen is that this market, we're expecting it back up to here anyway, but in here so far we've got a nice little A, B and C here, and that can fail from that point here. So it'll be interesting to see if this does something like this here and then moves to here, which in that turn there would make this the wave C, this the A wave, and this the B wave here, which is probably more in tune to the actual structure. And what I mean by that is that the size of this would be have some sort of relationship with the size of this move here. Look, apart from this particular pattern here, we may see this market move and make new highs straight up through here, and this being a wave 4 here, and this is sort of how it would play out through here. Just on the larger chart here is there's a couple of possibilities that I wanted to discuss, and I wanted to discuss them because as I mentioned some time ago, that just bringing this over here on the monthly chart here, we've got the MACD ready to cross over here on the monthly chart here to give us a nice bullish picture up here. It's we've been looking at it since the low here, of course, but it's starting to come into sort of play here, and we just need to sort of consider that, because if that's the case, then we'll be making new highs above over here. And and also the other thing too is that one of the important things here is 93 is the top of group 1, so this is minor group 1 of 90. So support on 93 sets the target for 95. Now it didn't quite come back down and retest the 93 here, so that tells me that it's actually quite strong here, and there's a lot of buying here at this level here. This move down through here, it can be counted as 5 waves, but as I mentioned, there's 2 problems wrong with it. There's overlapping wave 4 to wave 1, and the wave 1 down here doesn't appear to be in 5 waves. It's more like 3 waves. So there's a case here for this to be all corrective here. And that if that's the case, then we could look at it in this light here. So we'd remove the A wave for a moment. This alternative wave 4 here would be this wave 4 coming into play here, and this wave 5 moving up through here. This wave, just going to move this out, this wave 3 here. And down here further, we would look at this here as being wave 1 to here, wave 2 to here, because this one here is always in 5. It was in 5 waves, and I mentioned before that it always bugged me that it wasn't quite right, and we would look at it later. And this is one of the times to look at it now. So if this is up for 1 and back for 2, because remember that this is all wave 2 here to wave 3 here, and wave 3's normally got the extensions in it. So we can be looking at this here as wave 1 to here, wave 2 to here, and wave 5 would be up here, wave 3 would be here, just a larger dimension of structure, that's all. And then we would have wave 4 to this point here, with that there. And then we'll be looking for wave 5 moving up there further. I'm just going to save that while I'm here. And so that high can be taken out through here. So we need to sort of evaluate what actually happens in here. But before I get to that, I just want to point out that this is a possibility here as well, this particular wave 4, because we were looking for an A wave, an A wave, a B wave, and a C wave. Well, realistically, this would have to be to here. This can be the A wave, the B wave, and the C wave to here for this wave 4 here. Not that it matters at this stage either on this particular case, and it would look a bit like, I can find that here, what we were talking about yesterday as well, this wave 4 here that we're looking for here, it can be placed in here, because in a sort of realistic way, this particular pattern that's sitting here this is really quite squared off, but it's a classic trading levels pattern where we have, well, a variation of it, where we have the arrival, the reaction, the first high above the level, and then retesting the 93 here. Normally we would see it move down below that, and it can still do that. But it is, as it stands, a classic trading levels pattern and can move up. So we would just need to have, well, what are the setups to go long in here, and what are the triggers and so forth. But on the negative side of that equation is that it's normally wave 4 here that breaks out of a trend line channel. So it's normally wave 4 that breaks out of the trend channel. And that really hasn't occurred yet. So that's still a possibility that this can come down to the wave 4 of 1 lesser degree down to 92 here. So with all that in mind, we need to sort of drill in and have a bit of a look here. So just on the 15-minute chart and the move up from here yesterday, they were expecting as a wave B, and it can be that as such as well, because keyboard's not working properly. Got a wireless keyboard, and sometimes the Bluetooth packs up on it. But look, the main point here is that we've got this structure here which can be counted as the A wave to here, then an A and a B and a C wave here. So basically an A and a B wave, and then the C wave up through to here. So this can pull back to 50-60% in this area through here, and then move up from here. So in terms of trading, if you're sort of a long-term trader, it's this 94 here as support for the bigger picture. So if we can have a look at the bigger picture again, here, it looks quite a bit too big here, but basically this 94 as support would see new highs above here and up into the 95 area up through here. So it's quite a way to sort of wait for that. So finding a way in before that, if you're not in long already or whatever, is, well, if this was going to move down through here, then it would move down the 61.8% from this high here, which is in this range here. So we could say while this market stays above 93.30, then it could remain positive, and positive in two ways. It could be positive in terms of this all being the A wave, the B wave pulling back to the 61.8%, and then the C wave up to 94. Or if it was going to be a more bullish pattern, it won't pull back to this area here. It will probably only pull back to the 93.50. And the 93.50, if it pulls back into the 93.50 here and then works higher from that point, then you know that you're in a much more of a bullish pattern to the upside, and then you need to be sort of building the trade onto 90. Once it does come back down through to here, then find support on 93.60. You can glean a very small position there and look to glean on top of 93.72, and then look to trade the longer term to the upside, staying in the position up until 94 and then adding on 94 as well. So basically building a trade on that section there. The other side to this is that just a small pull down into here and then straight up to here, then you would still look at getting a position not at 93.60 but at 93.65, and then adding on 72 and adding on 80, and then just staying. Then don't add any more, because you want to add on top of 94, but when you get to 94, there's going to be swings from 94.30 back to 93.80 in that range there. So you need to sort of, not over trade if you're going to go for the longer term. Alrighty, moving on to the other point I wanted to make here too was the Australian yen as well. Just let me find the correct charts as such. This will do. Don't have that labeled, not that it's a big deal, but here we go. Last week we were looking at this being the low through here, and we were counting 5 waves up through here, if you remember. Then it's pulled back, it's 50-60%, and now it's moving off again. So in this wave 4 here, we'll be looking for wave 5 to the upside. And this is why I can't get my keyboard working for the drawing tools. But look, up for 1 here, back for 2. So the third wave will be up into here. Then there'll be a fourth, and then there'll be a fifth wave up here. So while this is moving to the upside, then the Australian dollar can move to the upside as well. And the other important thing too is the US dollar yen as well. Just on the bigger picture here, we'd been looking at this sharp move down through here, and then this time-consuming move back up here, which is getting a bit sort of old and tired now. So if we can just drill into that somewhat here. So this move down through here is in 5 waves. So we're looking for a 50-60% retracement level where we are now. So, you know, failing to find support on 103, or this moving down, you know, making an effort to move down through here at some stage, then you'll know that that the US dollar is weaker, and the Australian can push up from that point. And also the Australian dollar being, or the US dollar index being at 80 and failing at 79.85 is an important point there as well. So all of these other markets are supporting the Australian actually moving higher. We just need to see evidence of this trend here breaking down, and also the breaking of the US dollar index as well. But that should occur because we can see that, as I just mentioned, with the Australian yen here making its move higher. I mean, it doesn't move very quickly, this market, but you know, it's got all the right elements now for moving higher through here. The Euro Australian is just simply failed to find enough support on the 148 to be positive. It may do it, but it hasn't done it so far. So if you were trading long and looking for support and wondering what support is, well, this is the high above the level here, so you'd have to wait for this to play out through here, and then you would need to look for the trigger, which would be a move through here, and that hadn't occurred. Then you could have moved it down to this high here and look for the trigger at this point here, and also consider what's going on with 48, 10, 20 and 30 here in terms of support on 48.30. So that trigger hadn't come in there as well. So, look, if that occurs again on here, then you'll know what to do, because we are looking for the low in this, but we don't know if we've got it yet. But we could possibly have it because we're looking at a 5-wave move up through here. But, yeah, look, it's just unclear. We just have to wait for support on here. But that's what and if you do buy on here, just keep it really small. Okay, the pound yen. Looking at it on the daily chart here, what we do know and what we don't know. What we do know is that on the daily chart, this move down through here is corrective. It's in 3 waves. So at some point in time, we'll make a new high above here. What we don't quite understand or have enough confidence in is the rest of this pattern through here. We can look at it as a triangle pattern, and that triangle pattern could be finished at this particular stage here, where we're expecting a bit of a larger triangle, and that still may play out as well. But having support on 172 is a strong thing. But also these little highs here are all coming into play here, so there's going to be resistance in here as well. So if that's the case, we need to be counting 5 waves up through to here, and we'll be looking for a counter trend in through here. So we can expect to have resistance at 172.72 and 172.80, and if the market is going to trend straight up through here, you won't miss it, because you would use the top of group 1, and so top of group 1 is 3, so 173. So looking for support on top of 173 is the step to higher ground, because well, it is group 1. If you understand the machinations of that, well, then that's fine, but in simple terms here, it would also see the breakout of these old highs here as well. Alrighty, the euro yen is in more of a weaker situation here. If I can just, I normally have all my charts set up, but bit of mayhem now and again with restarting the program and things. Just find the bigger chart that we're looking at. And this is it on the 4-hour chart. We can start here. And as you know, we were looking for this whole move here. This move down here is impulsive in 5 waves. So we were looking for the market to move back to the 50-60% retracement level around the 142 area here. And that's still playing out. But looking at this in terms of an A wave, a B wave, and a C wave for this particular B wave here. And yes, well, if I can just find the next chart smaller here, we're still looking for a little push higher here because this particular move down through here is in 3 waves here. See if I can find that here. It's not there. Okay, this will do the trick. So I thought we may have had the 5 waves, and we could still have that in terms of the 1, the 2, the 3, the 4, and then 1, 2, 3, 4, and 5 across here for the wave C to make the larger B wave up through to here. But this move down through here is in 3 waves, so it makes it corrective, and that high should be taken out through here. That said, this little move up through here also appears corrective as well, like bearish corrective. So bit of a dilemma here, really. So I suggest not doing much at all. You know, if the 140, 150 becomes the retested resistance, then you would know that the bias would be to the downside. Yeah, so let's just allow that to play out through here, and yeah, there's not much we can do. If we find really good support on 142, well, then of course we're going to be going long from that stage. But all our indications are saying this is the 50-60% retracement area through here, and we are seeing it struggling. We just can't get any confirmation on wave counts to the downside just yet, unless this is unless that's the actual top there, and we've got 1, 2, 3, 4, and 5 here, and this is the A, the B, and the C here. Then we'd still need the 140, 150 to be the retested resistance to look for short positions at that stage there. On the daily, this is, you know, moving into the overbought range, so there's a lot of pressure on this market at this particular space here, and we can see that across here as well, but we're just not getting clear evidence of a move to the downside. Alrighty, well that's it. And just to recap a little bit, a lot of things in the FX actually sort of hinge on the US dollar failing at 80. We were expecting it to go a little bit higher, and the first point of weakness would be that 79.85 being breached, but it's really, in terms of confirming it, would be the 79.72 as a retested resistance there. Alrighty, thank you.